Hello everyone, my name is Lynn. Welcome to my budget analysis for the City of Anaheim. So today I was making the comprehensive annual financial report. So in short, it's the CAFR. Then I will show you the indicators that determines the fiscal health and finally the difference between the information on the budget compared to the CAFR. To begin with the financial analysis, I we'll look at the total assets available to pay, which is the city's total fund that it is allowed to use. And the information can be found under net positions. So to get the number, I took the total assets, subtract the capital assets and restricted assets together, and got $1.1 billion of total assets available to pay. And you can see this information to your right hand column, and I highlight the different numbers that I used in that formula. And this is important to compare later for the city's expenditure. So moving to the government activities, you can see the expenses for government functions and program. Then there are revenues generated by those activities. So looking at the expense of the government activities and business type activities together, and I highlight that in green to your left. You have a total of $1.2 billion. And again, these numbers are looked at in thousands, so I add 3 zeros to each of these numbers. So the number is in the blue. And what this means is the number exceeds the available funds, as I mentioned earlier in the previous slide. And from this sections, I can also calculate the change in the net position by subtracting the total revenues and transfer from total government. So if you look at the little red box, I subtract that from the total government in the orange box. So what I got is negative 26,040. And the negative number indicates that the city experiences a loss of money. So therefore, the fiscal health of Anaheim does not look so good, since the money available to pay for government activities is way lower than the expenses, while the city is experiencing the loss of money. So earlier we looked at the city's available funds and the expenditures. So I did other indicators using different formulas. And the first formula is the current ratio. It measures the ability for an organization to pay off the short-term liabilities. So that's things you owe. And the formula is current assets over current liabilities. And the current ratio for Anaheim is 5.154. So it's higher than 1.0. This indicates that Anaheim is more than able to pay its short-term liabilities. So in short term, it's good solvency. Then to the long-term liability ratio, and that's the long-term non-current liabilities over the total assets. And for Anaheim, it's 0.546. So typically, if this ratio is less than 0.5, it would indicate a healthy or low risk of the organization being able to pay off its long-term debt. Since the ratio is over, it indicates that it may be medium or higher risk, and in the long term, it's not good solvency. And for operation ratio, it's the total revenue over the total expenses. For Anaheim, it's 0.979. So the ratio shows that Anaheim, how much revenue they brought in compared to the expenses incurred. And Anaheim had more expenses than the revenue for the year ending 2020. So the budget solvency is not good. Anaheim is not keeping a healthy ratio of its revenue compared to its expenses. And this data information confirmed the available funds and the actual expenditures that I looked at earlier. So the solvency is good for the immediate fiscal year in the long term, but the city of Anaheim will encounter difficulties to meet its long-term debt obligations. So the information on a budget is basically a plan for a fiscal year. It indicates where the tax come from and other revenue sources are to be allocated. The CalFIR information shows the total of all the financial accounting, so there is a comparison of the period budget and actual. It also gives a detailed view of the current investment accounts by category. Thank you very much for listening to my presentation. I look forward to hearing your city's financial reports, and have a blessed week.